Hello, welcome to week 4. This week we're going to be talking about accounting and finance. So accounting is the measurement and the communication process that's used to report the activity of profit-seeking businesses, and it's called the language of business. Accounting represents all the financial transactions of a business in a format that can be interpreted and understood by both internal and external stakeholders. And so internal and external users are users of accounting information, and we separate them into two groups. Internal is people within the business, such as human resources, product managers, employees, and then external investors are people like the IRS, potential stockholders, finance companies like banks, and local tax authorities. There are 4 key financial statements. We're going to talk about 3 of them today. And these are required by GAAP, and it's required that businesses use these to present their financial condition. And these are the income statement, the statement of owner's equity, and the balance sheet. The income statement is also called the earnings statement or profit and loss statement. It's the first financial statement that's prepared because it provides information for the remaining 3 statements. It also provides information about the profitability of a stated period of time, which is usually a calendar year. And it's made up of 2 types of accounts for the most part. These are revenues and expenses. And we can take revenues, subtract our expenses, and we get net income. And so this is a look at a very simple income statement. We start with revenue. We list out the revenue for the year, $60,000. And then we list our expenses, and here they're giving you a salary expense and a utility expense. We total those up and subtract them from our revenue, and this gives us net income here of $57,900. The next is the statement of owner's equity. It's also known as the statement of retained earnings, and it explains the changes in retained earnings between the 2 balance sheet dates. So here's a sample retained earnings statement. We start with beginning retained earnings, and here we can see that that is 0. When a business first opens, they will not have any retained earnings. Retained earnings is something that grows from year to year. So in year 1, the retained earnings balance would be 0. And then we're going to add to that the net income from the previous month or year. And you get that directly from the income statement. And if you'll remember, it was $57,900. And so this gives us an increase in retained earnings of $57,900. Next, we're going to subtract any dividends that were paid out. And in this case, they're telling us that there were none, so there's a 0 there. And so then that we get the ending retained earnings, which is exactly the amount of the net income, which was $57,900. And then next we'll look at the balance sheet. This is also known as the statement of financial position. It provides a snapshot of a company's financial position at a moment in time. It lists a company's assets, liabilities, and equity, and this is where you can see the accounting equation at work. It's assets minus liabilities equals owners or shareholders' equity. And so here's a look at a balance sheet. You can see it's separated by assets, and then we have our liabilities and equity on the right side. So we have our assets on the left, and they're listed out. Here's our cash, accounts receivable. We have some supplies, some prepaid rent, some equipment, and a truck, and we have a total assets of $88,100. And then we have our liabilities and equity on the right side. And so we have an accounts payable here of 200 and total liabilities of 200. And then we have our common stock listed. Here's our retained earnings. You may recognize that figure, 57,900. And then we add all of this together and we get a total liabilities and equity of 88,100, which is the same as our total assets. And this is what you're looking for. The two sides have to balance. The left side has to equal the right side. And in this case, it does. Now there's one other statement, financial statement, which is the statement of cash flows, but we're not going to get into that today because it's a little long and lengthy and complicated, but definitely one that you're interested in and you want to know a lot about if you are looking to invest in a company and you want to know the health of the company. You want to review the statement of cash flows. So my challenge to you this week is to think of a company that you're interested in. It could be any company, and try to find their financial statements on the internet. You can typically do this by just typing in the name of the company and then typing in the words investor relations, and this will typically take you to a page where you can access the company's annual report. And so in that annual report, they will list all of the financial statements. So my challenge to you is to pick a company, try to find the financial statements. They're typically online, pretty easy to find usually, and just review the financial statements of the company and see what you think. Is it something you would want to invest in, or maybe not? All right, good luck everybody this week, and I will see you in the discussion.